Morning, Steve Free in Chicago with the morning grain comments. Well, we had one of those Monday weather markets yesterday when the funds came in and bought a lot of futures, corn, beans, and wheat because of the weekend rains across the Midwest, snows in the southern plains, and the cold temperatures. At the end of the day, funds bought 18,000 beans, 20,000 corn, and 12,000 wheat contracts. Open interest actually went up a little bit in the beans, but went down in the corn and wheat. And some people think that that suggests that we could actually work a little bit higher because the funds are not out of all of their short positions if they want to get out of those short positions. Overnight, we got beans up 6 cents. Corn's down like 1 to 2. Wheat's up 2 in Chicago, and Kansas City's up 5 cents. We've got some resistance in the July beans at 9.80. 380 in July corn and 465 in the July wheat. Now the weather maps this morning changed from yesterday. It looked like we were going to have a little bit of rain this week and then move to a warmer and drier condition for much of the Midwest. Now they've added rains Wednesday through Friday across the central Midwest and into the east. So we could look at another half to maybe 3 inches of rain for the wet areas. The 9 to 12 day maps put storms in across the Midwest. So the question is, USDA estimated that corn planting is about 34% done versus 34 average. Illinois is 63 versus 47, while Iowa was 45 versus 26. So in those wet areas, Missouri, Arkansas, Illinois, and Indiana, there's going to be some replanting. By Monday, they think that maybe only 4, maybe 5% of the corn will advance in planting. And as of May 8th, we could have less than 40% of the U.S. corn crop planted. And some people think that after that, we start seeing a drag in U.S. corn yield and may actually start plugging in a yield this year below trend. And that would make things a little bit tighter than maybe what we're trading. Soybean plantings were 10% done versus 7 last year. And again, there'll be a lot of field work done in the heart of the Midwest. So we'll see what happens to as far as crop conditions are and planting paces are. USDA kept the winter wheat crop ratings at 54%, good to excellent. Last year we were at 61. Kansas is at 49. But people are expecting a pretty sharp drop in ratings next week because of the snows in the western parts of Kansas and all the heavy rains across the soft red winter wheat areas. So we'll kind of look at the May crop report now and say, can the USDA catch all the problems in the winter wheat crop on their first estimate of the 17 crop? And some people think that they may see a modest drop in what the average trade guess is, and it may not be until the June report until they actually figure out what the problems are. And then as far as farmer hedging is concerned, people are saying, let's wait a little bit on the 17 crop and just see what happens from the weather here on out. But you can look at the 2018 crops and start doing a little hedging out there, especially in wheat with the big carry that we have in the market. You can almost get some Minneapolis wheat for $6 a bushel. And so those are kind of areas that you can kind of nibble away as far as cash hedging. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.